If you own any tech stock, Apple, NVIDIA, AMD, your money flows through one company in Taiwan. But this isn't another TSMC explainer. The real story is who actually controls TSMC. And it's not who you think. We trace the ownership chains, the board seats, and the government connections most people never see. Today, 3 things why every AI company on Earth depends on one factory who actually holds the power inside TSMC, and why that structure could crack under pressure. Here's what I mean. TSMC is legally a private company, but functionally it operates as a national strategic asset. And financially, it's influenced by the same 2 firms that own its biggest customers. That triple structure is what nobody talks about. So let's break it down. Start with the numbers. TSMC makes an estimated 90% of the world's most advanced chips, everything below 7 nanometers. That's the stuff inside your phone, your laptop, and the servers running every AI model you've ever used. Apple designs its own processors, but every single one gets built at TSMC. NVIDIA's GPUs, the ones powering the entire AI boom, all manufactured at TSMC. AMD, Qualcomm, Broadcom, same story. These companies design the blueprints. But without TSMC, those blueprints are just drawings. Here's what's counterintuitive. You'd think companies designing their own custom chips would reduce TSMC dependency. Amazon built Graviton, Google built TPU, Microsoft built Maya, but all 3 still need TSMC to manufacture them. The custom silicon trend doesn't weaken TSMC's grip, it tightens it. Now flip it around. TSMC itself depends on one company, ASML in the Netherlands. They're the only manufacturer of EUV lithography machines on the planet. No alternative exists. So the chain looks like this. Netherlands makes the machine, Taiwan makes the chip, America builds the AI. 3 links, break any one of them and the entire global tech economy stops. On the surface, TSMC looks like any major public company. Listed on the NYSE. Over 75% foreign ownership. Standard institutional investors. Nothing unusual. But look deeper. TSMC has 3 competing power centers stacked on top of each other. At the operational level, you have the management team, Mark Liu as chairman, C.C. Wei as CEO. Both were handpicked and trained by Morris Chang, the founder. Chang retired in 2018, but his influence never left. TSMC's culture still runs on his founding principle, pure foundry, never compete with customers. That philosophy is treated like law inside the company. Then there's Taiwan's government. TSMC was never a normal startup. In 1987, Taiwan's National Development Fund created TSMC as a state project. They recruited Morris Chang directly from Texas Instruments. Today, the government holds roughly 6% through that same fund. Small on paper, but the government controls something more important than shares. It controls the power grid, the water supply, the export licenses, and the labor pipeline. During Taiwan's worst drought in over 50 years back in 2021, the government cut water to farms. TSMC's fabs kept running. That's not how you treat a private company. That's how you protect a national asset. Now here's the part almost nobody discusses. BlackRock, Vanguard, and State Street, the 3 biggest asset managers on Earth, collectively hold an estimated 17 to 20% of TSMC's voting rights. That's more than triple what Taiwan's government holds. But it gets deeper. These same 3 firms are also the largest shareholders of Apple, NVIDIA, and AMD, TSMC's biggest customers. Think about that. The same capital network sits on both sides of the table. They own the company making the chips and the companies buying the chips. BlackRock and Vanguard manage other people's money, pension funds, 401ks, index funds, but the voting rights stay with them. So the actual influence over TSMC's direction sits in New York, not with the millions of individual investors whose money it really is. This isn't just investment. It's structural governance over the entire semiconductor supply chain. Here's something that tells you everything. Morris Chang retired in 2018, but he still attends APEC summits as Taiwan's presidential envoy, a private company founder representing an entire nation at global summits. That's how deep the connection runs. Taiwan calls this the Silicon Shield. The logic is simple but powerful. If China attacks Taiwan, TSMC gets destroyed. And if TSMC goes down, every smartphone, every AI server, every data center in the world faces a crisis. Some analysts estimate the economic damage could rival the '28 financial crisis. So the United States and Japan have no choice but to defend Taiwan, not just because of alliances, because the economics leave no other option. The chip factory isn't just making processors, it's the most expensive insurance policy on the planet. That dependency chain is dangerous enough on its own, but the real question isn't what TSMC makes, it's who's pulling the strings behind it. So three forces share control of the most important company in tech. Right now they all agree on one thing. But there's a reason Taiwan treats TSMC like a military secret. So let's connect it all. TSMC controls advanced chip production. Three forces control TSMC: American passive capital at the top with the most voting power, Taiwan's government in the middle with infrastructure control, and the management team executing daily operations. Right now, all three want the same thing: keep TSMC dominant. Passive capital wants stock returns, Taiwan wants its shield, management wants to lead technology. Perfect alignment. But three scenarios could break that alignment. First, the US pressures TSMC to move its most advanced technology to the Arizona fabs. That directly threatens Taiwan's shield. If the best chips can be made in America, why defend the island? Second, BlackRock starts cutting Taiwan exposure over geopolitical risk. That triggers a sell-off and weakens TSMC's market position. Third, China begins an economic blockade of Taiwan. That forces all three players into crisis mode with no playbook. None of these are imminent, but all three are structurally built into the system. They're not risks that appear overnight. They're fault lines that already exist. So what does this mean for you as an investor? TSMC is not just a chip company. It's a geopolitical structure disguised as a stock ticker. When you buy TSMC, you're buying exposure to all three control layers at once: American passive capital flows, Taiwan's national survival strategy, and a management culture built by one man over 4 decades. TSMC trades at roughly 30 times earnings with a 35% return on equity. Those numbers reflect AI demand and technical dominance, but they don't tell you about the structural tension underneath. The three layers are aligned today. Understanding when and how that alignment breaks is the real edge. Here's what you now know. Every major AI company depends on TSMC, and that dependency is growing, not shrinking. TSMC itself is controlled by three competing forces: US capital, Taiwan's government, and its founder's legacy. Right now, they agree. The question every investor should ask is, for how long? Subscribe so you don't miss the next one. We're just getting started.